no muscle, no hustle, no backbone. I stand alone, not tripping, just saying I'm different. Ain't hanging on to the coattails of the next.
Well, welcome back. This is Mr. Not Advice. And before we get started, I want to disclose that the stocks that we'll be discussing today will be EOSE and ENVX. And I might have a position in either one of them, and I might be long or short. This is not an offer to buy or sell. This is not a recommendation for trading or for specific investment advice. And that covers myself as well as my guest, who I'm excited to have back, Mr. Greg Reyes. How are you doing today, Mr. Reyes?
I'm doing great. How about yourself?
Well, I'm doing fantastic. Dallas lost. They got destroyed by New Orleans. So I'm glad to see Dak Prescott's $250 million contract extension going well out the door. So being an Eagles fan, but I'm doing great. And we had a lot of news flow from a couple of our companies, and I'm glad you've come back. And why don't we just dive into it, and we can start talking about ENVX first. My view on it was I have to be honest, I walked away disappointed. I thought it was more the same type of, I know you and I have discussed briefly before this call, some of the same type of verbiage. And, what I took away from the call was really simply that they're not going to name a customer until 2020 into 2025. I do have some concerns about their runway and their cash position. But for now, for me, there's no drive for me to establish a larger position. From a technical basis, we're about to hit the point of control. So I wouldn't be surprised if last week's excitement, I still expect the gap to close. And now we have a second gap that needs to close. But I still expect the gap to close below us. And barring any significant news, I expect by the end of this year that we will test new lows too, unfortunately. So I still am excited about their technology and what they have planned. But what was your give me some of your feedback. What'd you take away from the call?
Well, I think that it was absolutely necessary. I think that the stock started to sell off precipitously after the last earning call, which, by the way, I think was terrific. But for the last throwaway statement Raj made about having tapped the ATM to the tune of $40 billion to, shore up the balance sheet, I think there was confusion around that. I think his 10b5 filing was just a really bad look. I mean, there's really no way to put lipstick on that pig. And then I think there was confusion about their refiling of the shelf. And I think that's what really caused people to, sell the stock off. That said, I think that, the call was fine in the sense that, Raj canceled his 10b5. I think that he missed the opportunity to, opine about his confidence in the company. And even though it may have been embarrassing to say that, his need for funds had to do with the purchase of a house, that's kind of a personal financial problem, in my opinion. It shouldn't be something subjected on shareholders. But when a CEO sells a third of his position or files to sell a third of his position, stock was 14 then, it's just a bad look, period. And it hurt the stock. And to say otherwise is just not being intellectually honest.
Mm-hmm.
He also, signaled that they're in the final stages of negotiating another joint development agreement with another smartphone OEM, which I think is terrific. But I've been thinking about it a lot. And I've been thinking about it not just in the context of the call, which was fine. It stemmed the bleeding, stock caught a bid. I've been thinking about it in terms of where we've come from and where we actually are if we think about ENVX in an intellectually honest way, and what they need to achieve going forward. So if I go back and I think about where ENVX was in January of 2023, there was a special presentation by TJ Rogers. He talked about the agility line being stood up in the fall of 2023. He talked about exiting 2024 with 4 lines up and running. There were 80 customers in the funnel, 1.5 billion plus in revenue visibility. And 2025 was supposed to be the revenue ramp year where the company was supposed to exit at $1 billion run rate. So, that's kind of my baseline. And by the way, I think it was unfair to saddle a new CEO with those expectations before he even started the job. But it is what it is. So kind of reflecting on where we are, how do you juxtapose that against the expectations going into 2023? Well, Raj said on the call that the agility line will be producing units at 90% yields by the end of the year. Well, that's fine, but it's not the high volume line. He said that the high volume line, they've got plenty of time to stand that up, and it's just an issue of adding high speed conveyance and running the machines faster. But there's risk associated with that, and I have total confidence that they'll get there. And then he said that we're going to start shipping samples in Q3 on the last call. On this fireside chat, he said, we're going to ship them in September. There's still 2 weeks to go. And that was kind of disappointing to me from the standpoint that customers haven't even started the qual cycle yet. It sounds like they don't even have the units. Now, there's a good excuse for that. Raj said repeatedly that they were going to test all of the batteries to make sure that they met the OEM's qual specs. But the reality of the situation is that the qual has not even started yet for the first OEM. He said that the EX2, which in my opinion is critical for the company to achieve its long-term unit economics of $150 million per line with 50% gross margins. The line pays for itself in the first year. But then he said, we're still confident that the EX2 will achieve 15 to 30% better energy density than the EX1M. And that's a little bit of a concern in the sense that it had always been that it was going to be 30% or better. So is it 15%? Is it 30%? That was a bit of an eyebrow raiser. I think that signing another JDA with another smartphone customer is great. But I think that the reality of the situation is that, and Raj said it, we're going to be ramping in late 2025. Now, in prior earnings calls, he'd said Q4. So, what does late 2025 mean? Does it mean December? Does it mean October of next year? Those are important in my mind because what we still don't know from the company is what is their projected revenue ramp. So, as we look into the future, I feel like the company is at a really important crossroads, and I think they have executed exceptionally well. They need to continue to execute exceptionally well because any delays or issues in the OEM qual cycle is going to push this ramp into 2026, which causes me to question what is the real capital situation of the company? Raj said they topped off the balance sheet in the last conference call, but they've got about 250 million in cash. They're burning around 35 million a quarter. That means that if they're ramping in the second half of 2025, they could be in a fine position to the extent that they're able to raise money through non-dilutive debt financing or customer funding or a sovereign providing them with money. If we slip the ramp into late 2025 or early 2026, it could be a different story. So I think that it's unfortunate that Raj and his team got hamstrung with TJ's special presentation, but they've still got a lot of work to do. And I still am bullish about ENVX long term and ENVX's prospects. But it could be a bumpy ride between here to there. We've seen a lot of volatility. I think it is causing some investor exhaustion. The shorts continue to press. I think there are almost 50 million shares short, which is, I mean, it's just eye popping, and they don't seem to be covering it all. And these guys need to execute, and they need to deliver the goods. And I have every confidence that they will, but there are some things that are out of their control, like the OEM qual cycle. And if things continue to delay, maybe an OEM will say, well, gosh, I'll just wait for the EX2 because it has better performance characteristics. So love the company, have a lot of respect for the team, but it's been a roller coaster ride. And I think the other thing that is unfortunate is, as good as Raj is as a operating CEO, I do feel as though the tolerances, and what I mean by tolerances is if you have tight tolerance, it means that two pieces fit together quite well. If you don't have tight tolerances, you can have things be misconstrued. Is it Q4? When he says late Q4, does that still mean Q4? Does it mean December? When he says 15 to 30% better performance, what exactly does that mean? And I think that he can go a long way to improving his communication game to take all the tension out of the system and not give the Bears any fodder to make a meal out of. And unfortunately, if you think about the stock over the last couple of years, every single major sell-off has been due to some unforced communications error, where something was not communicated effectively or explained in a fulsome way, or something was dropped without any explanation. And like it or not, this company has a huge retail shareholder base. And this shareholder base, they need to have things explained in a fulsome way so that people, they can have confidence as they're riding through the volatility and they can sleep at night. So, I would say that that fireside chat was absolutely needed. It did what it needed to do. I think it could have been better, but this company needs to not only continue to execute, but it's more about there's more to it than just execution. And they've got to have some things go their way in terms of qualifications and the EX2M coming together within the right time frame. So that's how I'm thinking about things.
I think, talking about as Raj as an operational CEO, I think that's a great point because I agree. I mean, the man, my perception of him is he's a brilliant man. He incredibly hard worker. Okay. But there's, as being a former successful CEO, I mean, it's an ecosystem, right? As a CEO, it's not only the operations, it's also the shareholders, it's the institutions, it's managing all of that. I was thinking about it, and I don't think Raj is going to change. I'm still going under the assumption that the change or the as you said, the tolerance is wide. I'm probably more jaded than you are, because immediately I start questioning, is it purposeful? Are they doing it purposefully? And actually, last year I made the comment that it was purposeful. that I think the phrase I used was he's doing fun with words. And I think that until or unless that changes, I think the volatility in the stock is going to remain, just as you said. I am concerned that there seems to be, from my perspective, some tone deafness going on because, for example, their IR. They didn't announce they did they have a new IR that was done via LinkedIn. The IR came from a penny stock company. Well, that's an entirely different class of investors. And it's not a class that I would say has done exceptionally well investing. Okay. So they traded down as far as I'm concerned. And, you know, from watching them in earnings meetings and live casts, maybe, idea I had is, well, maybe Farhan is the guy to be out there and giving these types of updates, because that's going to be an issue. It's going to continue to make the stock volatile, and it also makes the job easier for the shorts. I mean, people talking about, am I surprised at the size? Yes. Am I surprised they haven't covered? No. They haven't had to do any work. The company's been doing it for them, and now they have a trend. As you said, every big drop has been the company's fault, a misstep, a miscommunication primarily. So, looking at from a completely neutral standpoint, you say, well, yeah, the trade has been to the short side, quite frankly. The long trade has always had more risk, and that risk is going to remain, as you said, for some time. I am concerned about their cash burn. If they have no delay, they name the customer late 2025. Let's say that's fourth quarter. He said 30 days then to ramp, right, until deliverable. Okay. And they're cutting it awfully close, is what I'm saying. And as you stressed, the risk of things going wrong beyond their control, I absolutely agree. And I think it's a given. Something will go wrong beyond their control. There is going to be a delay. So I think that, I think long term, the potential is still there. But from now until, I think, the next 3 to 9 months, it's not a stock that I would say, hey, it's going to break out of this volatility and start to really trade on its own merits, because it won't have merits until then. So, yeah, I really appreciate your insight, though. Do you think that right now there's a heightened focus on communication from the company because, or put another way, once and if they hit the part of the business cycle where they have their customers and developing, that the communication issue will become less important, Greg?
Well, I think the communication issue is always important. And I
Okay.
think that if you look at the great CEOs of our time, they're excellent from an execution standpoint, and they're excellent in terms of how they communicate with investors. And, you know, I have spoken to the company about the IR change. And I did speak to Farhan, and he said, look, I'm going to be the lead when it comes to investor relations and investor communication. And, I wanted somebody that could be more of a functionary than outward facing.
Beautiful.
And I get that. And I hope that we see an improvement. I like the prior IR guy personally, but when I would speak to him, I felt like I was talking to my dog. I didn't get much feedback. I didn't
Mhm.
get much in terms of dialogue. So I think there's a lot of room for improvement on that front.
I don't
As
know
it
if you,
relates to Raj and his, go ahead.
no, I'm so sorry. I was going to say, I don't know if you can disclose it or you want to, and if you can or don't want to, that's fine. But is there any consideration to hiring an outside firm? Because again, I think that outside firms also open up other relationships, whether that be, and I understand they've got TJ and, standing behind the curtains here, who has probably some of the premier banking relationships. But, do you think that's important?
Well, I don't have any personal experience working with outside IR firms, but they need to dramatically change their game on that front.
Okay.
I've tried to work with them extensively. I think the last cycle they took a lot of my feedback and they ran with it, and I think they did an excellent job. But lo and behold, uh, they poured gasoline on themselves and lit themselves on fire with the 10b5 and the comment about the ATM and the refiling of the shelf, all of which could have been explained. I don't know that you could have explained away the 10b5. And I don't care what other people's opinions are. I can tell you, having sat in that chair, when you file something like that with that kind of enormity, the reality of the situation is that big investors are going to, sit back and not want to be buying in front of that. I think Raj learned a painful and expensive lesson through that process, and hopefully he doesn't repeat it. And I think that, the the key to being a successful executive when communicating to investors, in my opinion, is you have to almost take the Dale Carnegie approach of when you tell them something, you tell them what you're going to tell them. You tell them. You tell them why you told them. You tell them the implications of what you told them so that you don't leave anything to chance. And I think a great example of that is you go back to October of last year when the company announced that they were going to be pivoting to smartphones
Mm-hmm.
and they were going to be shutting down Fab 1 and putting all of their energies into bringing up Malaysia. And I talked to the company about it. They said, we don't understand why investors don't get it. We said this 3 conference calls ago, and we said that 2 conference calls ago, and we said, this when we announced it. And my response was like, what makes you think that people have all of that uh, committed to memory and can put it
Mm-hmm.
together off the top of their head? I mean, I follow the company closely, so it made total sense to me. But it took shareholders some time to process it, and in the interim, the stock dropped 4 points. And these are easy things. And I think when you've got people sitting in those chairs with engineering backgrounds that deal in a world of absolutes because they're computer scientists, it's just not intuitive to think about your audience, what's important to your audience, and explaining things in a way that your audience can effectively consume. Right. So take the throwaway comment about, gee, we hit the ATM for, 40 or $43 million to top it off. Instantly, I had people reaching out to me saying, what the hell's going on? Are these guys going to be one of these companies that are continually bleeding out with the ATM? And I called the company and I said, hey, during the JP Morgan call, uh, Farhan said that they were done with the ATM. And they said, yeah, we are. We have no plans at this time to access it anymore. And I said, well, why didn't you say that? Right? If they had said that, they would have neutralized that issue on the spot, but they didn't.
Yeah, let me ask you a question. Is this for lack of a better phrase, just learning a knowledge issue that you can experience? I mean, look, Greg, I share this with you pre-call. I'm pissed off because I, I take a critical eye to any company that is using shareholder public money, investor money, and I have a extremely high bar that I expect operationally from management. And it has served me well, and it's been developed because of investment banking deals I've done, where every deal where I was not looking at the company the way I'm looking at ENVX, every single deal I didn't do that, where I allowed myself to be swayed. Um, it was a bad deal. The company didn't perform. A couple of them became these companies that always were just this close, just this close. The finish line is just over the next hill, over the next hill. And with ENVX, as you've said, we've agreed on this. It's the unforced errors. I get it. It's the first time you've been an operational CEO, Raj. Totally understand that. You made a couple mistakes. I get it. But, I'm getting to the point where I'm disappointed in the fact because I thought I'd have a much larger position, quite frankly. I'm in no rush to have a position. I've got plenty of time to establish a position, but I am also getting to the point where I'm saying, okay, you need to fix this communication issue.
I don't disagree with you. I mean, I wish that the institutionalized learning didn't have a half-life, and the errors seem to be repeating themselves, but with different topics. And I think that it would behoove them to, before they say anything, to think about what they last said and to effectively bridge it. And if they're explaining something, don't assume that everybody understands the context or the implications of it. And it's something I learned very early on as a public company CEO, and it served me well, and I think it would serve them well. It's not that hard if you put some thought into it. And this is kind of the third time around the horn with these kinds of communications missteps. And like I said, I'm glad they did what they did, because if they didn't, that stock could have easily had a 6 handle on it.
Oh yeah.
Now it's right around $10. If they hadn't done it to begin with, I think the stock would be trading in the mid-teens. And
Yes.
I'm not a professional investor, but I think that there will be waypoints that if they achieve them, you can get more constructive. But they got to make it happen. And it's not just about execution. It's about execution and the customers also doing their part from a qualification standpoint. And it's at some point we're going to get close enough where they're going to have to say something significant about 2026
Right.
in
Right.
terms of revenue ramp. So we'll see. Stay tuned. I have confidence in these guys, but I'd be lying to you if I told you I haven't repeatedly been disappointed with their. I hate to use the term performance, but that's kind of what it is.
Yeah, and I guess to close out NFX was I would like to talk about EOSE, but to close out NFX, I guess I'm used to working, for those of you listening, why I have been on this crusade since last November about NFX's IR. Here's why. I'm used to working with IR where there is a conversation about what Greg has been talking about, and there's a frank conversation about how to manage that and how to achieve a goal of much more concise communication with shareholders, but also discussing what's the timing. For example, if you've in the middle of closing a gap, let it close. I'm used to working with IR where these were the types of discussions we had. We discussed, what are possible, news releases. Is there a way to, what's going to give the most effect for the stock? And so understand that I'm on the crusade for it because I think it would materially change the price of the stock over the long term, certainly over the last 9 months. Greg and I are in agreement. I agree with Greg, mid-teens. I mean, I sort of pegged $15, 13 to $15 where I think it would be trading if not for these missteps. But more importantly, you wouldn't have the volatility and probably you wouldn't have a rising short position too. So it's just, they're sort of stumbling, but they're creating new barriers for themselves or challenges. So anyway, I just wanted to explain. Thanks, for giving me the opportunity, Greg, where I come from in terms of IR and what my background is on it. So,
No, I agree with you. I agree with you.
so what do you think? Let's pivot to EOSE. Why don't you start us off?
Well, I continue to become increasingly constructive on the company. If you just do a recap from their last earnings call, you've got $50 billion TAM associated with the long duration storage market. You've got customers with an acute pain point that have spent tens of billions of dollars building out wind and solar farms and are realizing that they cannot operate them profitably without the ability to store the energy they generate for peak usage when the sun isn't out and the wind's not blowing. They booked 133 million. They got backlog of a little over half a billion. They've got a pipeline of 13.8 billion dollars. I mean, it's all there from a revenue standpoint. The factory is up and running. The company put out a video on it running at high speed. We've got service involved that I think we talked about at some length during our last podcast, where these guys are kind of the pros from Dover. They're not there to clip coupons on interest payments. I think they're there for a 10 to 20 bagger. You had to believe, because it's part of their standard operating procedure, that they did a deep dive with the technology, with their production capability, with their ability to convert their backlog to revenue, with the sales funnel, with the management team. To me, that remains a good housekeeping seal of approval, because they had access to information, that due diligence that we all didn't have access to, and they chose to invest. They've had a bunch of customer visits since they brought the factory up. They've explained how their existing technology is advantaged by 30% in terms of levelized cost of storage as compared to lithium ion. They've got 9 billion in leads, 12.3 billion in proposals. They've got the DOE loan pending. I think we saw, at least you and I discussed the fact that there was a Wall Street Journal article that talked about the fact that the Department of Energy is working hard to get all of these outstanding conditional loan approvals done before before the election. In my mind, if I look at EOS, it checks all of my boxes, and my boxes are big TAM, solving a critical customer pain point, compelling novel technology, experienced operating team, unit economics that are compelling. This company has incredible unit economics in terms of tax loss carryforwards, combined with government subsidies that will make them highly profitable. I think all we need for this stock to re-rate is the closure of the DOE loan, Joe Mastrangelo and team hitting their October 31st milestones to bring in another 60 plus million from Cerberus. And with that, this company will have, basically a balance sheet with access to capital, north of, 700, $800 million. There was a tweet that Jigar Shah, the DOE head who is responsible for this program, referencing a California pilot project. He references EOS and Invinity Energy as being part of that pilot. In the picture, you see EOS batteries. I'm going to speculate that to the extent that that goes well, there's no reason to believe that it won't, that they'll be on the approved vendor list. And from a competitive standpoint, ESS Technology, a potential competitor to EOS, is in dire financial straits. An Australian company that was a potential competitor to EOS has gone bankrupt. Invinity Energy Systems, based out of Scotland, has this asset light production approach where the batteries are being manufactured in Taiwan. Everything seems to be lining up behind EOSE in terms of marketplace dynamics and atmospherics. I really like the way this company is positioned and what they have accomplished. And, a re-rating of the stock to, $3-4 billion means, it's $7 to $10 a share, which is pretty exciting. Longer term, why couldn't this company have a 20-30 billion-dollar market cap if they are the premier supplier of zinc aqueous batteries that are lower cost than lithium? They don't catch on fire like lithium. They operate at lower temperatures than lithium. I mean, it's really, really a great setup.
Would they be? Um, is there any benefit to being classified? I know, like the chip manufacturers are classified as companies that are important to national security concerns. Does that provide any benefit to a company if you get that designation? Because I'm thinking about EOSE down the road here with lithium batteries and in terms of what's going to be needed for AI, right? And so, if that were, is that a possibility, Greg, or is that even something that's really not that important? What do
Well,
you think?
it's interesting that you mentioned that. Somebody brought to my attention that the Cerebus press release mentioned specifically the fact that EOS was the only 100% made in American long duration storage battery that I think the term was, strategically important to the
Yes,
United States and its allies. You
right.
know,
That's what I read. Yes, and that's why I was wondering. Well, that's an interesting statement, right?
it's a very powerful statement that
Yeah,
stands on its own 2 feet. If President Trump wins and he moves forward with his plan to impose tariffs on China, I think it, makes it even more acutely beneficial to EOSE. And,
you
and
think
and
these
the other
guys are
thing that,
connected, Greg?
say again.
You think these guys are connected into the hopefully the next administration?
It's funny that you mentioned that because I also read an article that one of the founders of Cerebus played a role in President Trump's last administration. So I do believe that they are well positioned, regardless of uh, which way the White House goes in November.
Good.
Um, but I do want to make one other point, and I
Sure.
think it's another upside that really has not been discussed in a fulsome way or reflected in EOS's financial potential. If you look at what's happening with AI data centers, they use approximately 9 times the energy of a traditional cloud-based data center, which means that the need to be able to store more energy in the event of an outage goes up significantly. And EOS batteries are perfect for that application. And I think that represents another incremental market opportunity that could generate revenue sooner than, the typical utility opportunity, because you don't have all of the regulatory issues and the permitting that is associated with these deployments. They could be dropping in these batteries very, very quickly, and I suspect that they will be.
So, I mean, from a, excuse me, um, so perhaps uh, if EOSE could be identified as a company that's integral to AI, because looking forward, there's also going to be additional energy needs when the first commercially available quantum computer is released in 2028. So, you know, that's going to be another wave of additional energy needs. Um, it's just extraordinary when I look at EOSC. I have to give Joe and his management team credit. I gave him a hard time on Twitter about pizza, but I have to give him credit because Cerebus, as you said, Craig, these guys, uh, uh, these guys are the pros of the pros, and the due diligence that they did. Uh, I mean, Joe did obviously a fantastic job to convince a company of Cerberus caliber. So, hats off to him. Um, Let me shift real quick. Let me ask you a question about the DOE loan. I'm hearing chatter, um, that the parties have agreed and it's been papered. And I did put that on Twitter. But here's my question: the fiscal year of the federal government, one of my members, VIPs, brought this up, ends on October 31st. Is that an issue, and or just verifying that the election itself won't be an issue because this has got bipartisan support? Yes.
Well, I mean, far be it for me to opine on politics or the implications of, things are dynamic and fluid and out of my pay grade. But my reaction to those concerns, the first having to do with the government fiscal year ending, is we've never seen a scenario where they shut down the government, ever.
Okay.
There've been posturing and threats and saber rattling, but it's never happened, and I suspect that it won't happen now, particularly in front of an election, because no party wants to be viewed as having been responsible for shutting down the federal government.
Okay.
In terms of an administration change, I think that if these loans are consummated and inked, it will be virtually impossible to unwind them. That
Okay.
said, I think that this Inflation Reduction Act, which really had nothing to do with inflation reduction, but was predominantly associated with the deployment of green infrastructure. Um, could you argue that the government shouldn't be spending billions of dollars to invest in EV charging? Yeah, you could probably argue that. But in the issue of solar and wind, these energy generation deployments are really a bipartisan benefit to their constituencies. I would be shocked if an administration change resulted in pulling the plug on that. And to the extent that these agreements are inked by the time the administration change occurs, if there is an administration change, um, it's going to be very difficult to unwind or unravel them, in my opinion.
I'm watching this other company, sort of in the battery business, but they announced that they're in this public comment period, and I'm wondering if EOSE is going to have to go through. Because for me, it's all about time frame. Because it sounds like what you're saying is that it behooved them to get this thing papered, signed off on um, by the election.
Well, I've I've heard the same chatter that you have,
Okay.
and what was relayed to me is that um, there are no longer any issues, that any modifications that needed to be made to the conditional loan approval with the introduction of service to the mix have been satisfactorily resolved, and it's just an issue of getting the formalities on paper, and that's about as good as it gets.
Okay.
Instead of
Yeah.
hearing that, gosh, they can't come to terms because service is
Right.
demanding to be first in line, blah, 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 blah. And I've heard it from multiple sources. And you add the Wall Street Journal article on the same topic to it. You see the head of the program, tweeting about the California project and mentioning EOS by name. I think it's all quite positive. It's not done
Yes.
yet.
Right.
Obviously, until it's done and announced, it ain't done. But when it is done, and you couple that with a significant order or two, or a letter of intent converting to backlog, I think this thing is off to the races.
Well, I agree with you. And from a positional standpoint, I had 8% of all my portfolios in it, and I was able to quickly sell it for a nice gain in 3 and 6 days. So I'm down to 4%. But if you're listening and you say, "Well, gee, that's not a lot of money," well, you have to understand what my notional exposure is, though, because my notional is times 100, because that's how many shares it represents. So my notional exposure is quite large. But I'm looking I don't know if I'll get it, because I think we may have hit that bottom. I talked about that 210 to 216 area. 2 to 216. I think we hit 210 and we bounced. And let's talk about the other side though, Greg. What are the risks? Because I only see one: failure to execute.
I it's so funny that you mentioned that, because I was just talking to a friend of mine who's involved today, and he said, I like, what is the bear thesis? I everything just looks so positive. What is the bear thesis where somebody
Oh,
could jump out of a base?
the Bears are saying that they're lying about their interested customers, that it's actually only one customer through many subsidiaries. I mean, that's their argument.
Well, if service wasn't involved, I would say that maybe there's a grain of truth to it. I just don't believe that bear thesis. I agree with you. I think it's execution and order timing. But I they've got 1.3 billion in letters of intent. They got 13 billion in proposals out. They've got everything appears to be moving in their direction. And maybe it's a show me story. Maybe the thing does not take off until they announce their next large order, which is fine by me. But it's not like they have a technology risk. It's not like they have a production risk. It's not like they have a technology looking for a customer problem that they've got to convince the customer that they've got a problem. It's not like they are a company that has a going concern problem. That's a problem of the past. It's execution and order timing, and I would be shocked, quite frankly, if we don't see the DOE loan and we don't see one or two large customer orders by the end of the year. And I think that, then people are going to start to think about the company differently. I mean, look, it wasn't until recently that many institutions could even touch it because it
Hmm.
had going concern wording in their filings. And you know this as well as I do. Until stock gets to be north of $5 a share,
Yep.
there aren't a lot of institutions that can be involved. So, I think as those things start to click into place, and by the way, the company also has a very large short position. They've got, I think, 45 million shares short. It's like 25% as opposed to ENVX, which is fast approaching 50% of the float. That could also provide a tailwind as they start to realize, holy crap, this company's not going bankrupt, and geez, they do have the orders, and gosh, they can make it. Um, it,
Well,
it's all
let me interrupt you. I will say this from experience. Excuse me, Greg. That as opposed to the ENVX shorts, the EOSE shorts are stupid because they haven't even adjusted after the Cerebus deal. I
it's
mean,
crazy.
right? I mean, these shorts are, you know, stupid. I mean, I looked at that and like, you guys didn't even adjust your positions. Are you kidding me? That's a huge deal. They're not a going concern. So the only thing I can think of is that they got in their mind that there's going to be some type of offering that they can get a piece of. They can, but any offering, if they think that it's going to be done down at this price or even sub $10, you got to be kidding me. I mean, at the end of the day, I believe this stock has the potential to hockey stick. It
I
just
agree.
depends, right? I mean, this is one of those things where, what you were saying is exactly right. It becomes a new class of stock, right? It's gone from, going concern and all the different classes it was before it, but it's gone from going concern now to well funded, right? What happens when they name their next big customer, which I think is going to be one of the customers they announce, because Cerebus controls that announcement because they're doing the financing and they brought that customer, right? So that's this 965 km, whatever it is. So looking at these shorts, I'm just saying to myself, well, what are they betting on? Because they should be covering right now, they must be betting that the market's going to crash. That's all I can be thinking, because otherwise these are the dumbest shorts I've seen, Greg.
Well,
With,
if that's the bet, I can think of 20 other companies that
or
present
better.
a better opportunity to
Yeah.
short than
Right.
EOS.
Not a 281 stock, right? How about maybe you get double digits so you got a little bit of room to fall,
Yeah.
But yeah, that's the only risk, Greg. I don't see, and again, I'm so skeptical that, again, I look at this and I'm thinking, wow. I mean, they have the cash, they've got demand. They also happen to be in the right place in the business cycle. And then there are these possible added benefits that, such as the verbiage in the press release from Cerberus, right, that you noted, strategic to the U.S. and our allies. Why? And so these are just add-ons, but could it go? Could they have hiccups? Sure, they could. But the potential for this company, and then trying to even get an idea or an estimate of how the market would value them. They're in a hot industry. I mean, that's, how many basis points is that good for? So they're in a hot industry. It's just, they're sort of hitting their sweet spot. They actually might be the type of company, type of stock, Greg, that defies a market crash and ends up attracting even more money to it, because it's able to continue to grow despite the economy and other stock prices falling, and money flows into it for that very reason.
Well,
So
think about this. Let's say, hypothetically, and I'm not suggesting that we're going to, but let's say there was a huge recession, like a really bad recession. Are people
mhm.
going to stop turning on their lights? Are they going to stop refrigerating their food? Are they going to stop,
No,
surfing the internet, watching television? Of course not.
are
The,
corporations
the,
going to stop pursuing the arms race of AI and the chips they need? No,
of
right?
course not. Of course not. So I think that here's another way that I look at it. And, I've given my success filter criteria multiple times. I won't bore you with it again, but if if
No,
you
no, go through it again.
okay,
Yeah,
so
please.
this is how I created my wealth when I became the CEO of Brocade Communications. It was back in the 1999 timeframe. I remember looking at the Sunday paper, and there was an article saying that there were 200 companies looking for CEOs, but no qualified CEOs. And I just sold a company that I was CEO of that was in the two-way data messaging space. And over a cup of coffee, I started thinking about, what is the key to success? And I determined that the key to success was that successful companies were able to check the following boxes: huge and growing TAM, right? If you only have $1 billion TAM and it's growing at 10%, assuming you had 100% of the market, you'd only be $1 billion company. But I was looking for a company that had TAM that was in the tens of billions of dollars. Does the company solve an acute customer pain point? Is the technology critical in helping the customer save money or make money? Does the company have novel and defensible core intellectual property? Does the company have an experienced and competent management team that can scale? Is the company well funded? Does the company have a robust board with no customer sitting on the board that can control the outcome? And I threw my hat in the ring. I must have been shown 30 or 40 deals. I passed on all of them until Brocade came across my desk, and I said, this company checks all the boxes. It took me 27 interviews to get the job. Uh,
Wow.
two years later, we went from no revenue to 600 million in revenue, and I was wealthy beyond my wildest dreams. And so that's my filter. And the point that I was going to make on EOS is, if you could get rid of all of the, I'll call it the EOS 1.0 history, of it being a SPAC and having failed to achieve their plan, in large part due to the COVID issue that caused them to lose a year, and the issues associated with the delays on the DOE loan, and concerns about them being a going concern. If you could just take a snapshot today, and if I was a venture capitalist and somebody showed me this deal, if you could buy it with a $1 billion, if you could invest at $1 billion market cap, you do it all day long.
Mm.
You do it all fucking day long, excuse my
Mhm.
French. And that's where we are at this point in time. I'm not saying that it's not speculative. It is. I'm not saying that it doesn't have risk. It does. But if you look at all the boxes they check and where they are and what they have accomplished and what they need to do to move forward, it's not like, gee, we need the money to prove that the technology works. They don't. It's not like they say, gee, we need the money to build a manufacturing facility. They don't. It's not
Mhm.
like they say, gee, we need the money to, attract and scale the team. They don't. They check all the boxes. And the company is trading today, in my opinion, with a market cap that basically is analogous to what you see in a lot of startups that don't have anything more than just a team.
Well, and using your analogy, Greg, if I can interject, um, gee, we have a company that we actually have seen the product work.
Yes, it's deployed. Customers
Right. So,
deploy
I
it.
mean, from a risk standpoint, I mean, I'll say this about, when I look at these stocks, because being a trader at heart, I look at ENVX, the easy trades that I take, meaning the ones that I look at that don't have significant outlier risk, um, they're the short trades in ENVX. They're easy. Okay. The long trades are the ones that, quite frankly, just get a little nervous on. Right. But the short trades are easy. It's exactly the opposite for EOSE. For EOS, it's literally the long trades are easy for me. They're a higher probability, and if the stock goes down on any dip, I'm adding. I mean, full disclosure, I'm going to add through leaps, and I'll probably use the same leaps I used the first time, which are the
See,
2026
but
twos.
isn't that the beauty of knowing what you're buying and understanding
Oh
your
yeah,
thesis?
yeah. Because when people talk, and this is a great conversation, Greg. Because people come in and they say, well, you're not. And I make this statement where look, I'm not a fundamental macro guy. Well, that's partially true. I understand and I pay attention to it, but I'm looking at it from, how do I think that's going to project or translate into price appreciation. And I've said this before, I want to know three things before I get in. I want to know, what's my stop, what's my target, and how long do I think it will take me to get there? And with EOSE, I have all those three. And quite frankly, there is, from a value standpoint, this company's still being valued as if it may not be a going concern, but it's still sort of a going concern. Like literally, when you look at this company, they have their product deployed, they have customers. Like you said, they don't need to build a line, they don't need to test it, they don't need to test product with the customers. I mean, it's just, their first customer, they have that, but it's not being valued that way. And I really think this has the potential, at least from this side of the desk, the hockey stick where you wake up one day, and the thing is $6. You wake up the next day, it's 7.20. After about a month, you look at the stock and it's, somewhere in the 15 to 16 range. It has that possibility, not a month, actually a week. It has that possibility. I hope it doesn't do that, right? Because that creates technical issues. But yeah, I keep, asking myself, and I've asked you, what am I missing? What's the blind spot here? Um, what could, I mean, obviously there are things that could go wrong, but certainly if you take a piece of paper, on one side are pluses and the other side are minuses, there's a shit ton of pluses for this company. And they're not even, as far as I'm concerned, hitting their stride.
No,
So,
I think they're just getting out of the starter gate, quite honestly.
Yeah, I think that, and in terms of stock price, I mean, who knows? Because who knows when and if the shorts plan on covering. And again, I don't understand why they're not covering. But yeah, I look at EOSE, and somewhere around that 350 to $4 level is where those institutions who have that unspoken policy about not buying under five, they start taking a look. They're probably
Hmm.
looking now, quite frankly. I had heard something about that. Is EOSC, is he doing a speech overseas also?
I think he did it in Dubai last week. I think that may have
What?
coincided with it dipping down to that $2 and change level, and
Why is
and
that
it's
important, Greg? Why is what's going on there? Why Dubai?
well, again, I'm just speculating. I think we've seen uh, Middle Eastern oil producing countries wanting to start to pivot and put their toe in the water
Mm.
with alternative energy technologies,
Hmm.
um, to try to augment or to bridge to the next phase of growth. As we see increasing effort to move away from carbon emissions. So the fact that he was invited to speak and spoke, I think, is very positive. I mean, look, here's what I'm going to do, and I'm not going to share this on this podcast, but I think it'll be very interesting, and we should do it. Um, Once they get the DOE loan and they get their first incremental customer orders as a result of them standing up the line and securing financing. I think we can have a very interesting conversation about, what is the right value for this company
Hmm.
in terms of its re-rating in the short term, and what could it be longer term. And I think, if you I think we need to have a few more data points and some proof points to have a credible conversation, but it's going to be eye popping when we wade into that.
I agree, because then I mean, it becomes sort of fun, because then you start applying multiples also. I mean,
Hmm.
which multiple do you use at different stages of a company? You're going to use different multiples. So, um, certainly the future looks bright with EOSC. And I think that, of course, this is one of those, and I've got to say that this is one of those rare examples, Greg. I don't know about your experience, but this is truly one of those rare examples where a company, for lack of a better phrase, comes back from the dead, because I don't think shareholders understand how close they were, um, and why trading, where they were trading at is very bad. Very bad things happen. And what they've done in this short amount of time is just incredible to me. And it is an outlier. This is not, in my mind, typically what you see. I don't know what your experience has been.
Oh, you know what? I don't think you can put enough exclamation marks behind what you just said. I think there are folks on FinTwit that are like, "Oh, I was right all along. I was a genius." This company was running on fumes, and it was flying, scraping against treetops, and but for the grace of God and Joe Mastrangelo and his team, they were able to make this happen, and it
Yeah,
completely changed the dynamic. And I don't think anybody really knows, other than maybe Joe and Nathan being the CFO, where what their plan would have been if Cerebus said, it's interesting, but we're going to pass on it.
oh gosh.
But that's all history, and
Mhm.
I think you need to turn the page and look at it with a clean set of glasses and look forward, and not continue to reflect. You can't drive the car looking in the rearview mirror.
Agreed.
But you nailed it, brother. I mean, I think this company, it was running on fumes, and now it's running on jet fuel.
Yeah, I got to be honest. I mean, if I looked at, well, I did, I commented on these companies back in January, and it was completely different between EOSC and NVX. And that's not to say, NVX, well, yeah, it is to say they've done some things that have hurt the stock, but that's not to say that the future is any less bright. But the future, there is a difference in the level of probability though with EOSE, and yet it's not being priced that way still
No,
today.
I agree. And by the way, I'm I'm looking forward to us having another podcast when we can
Oh,
talk about
awesome.
ENVX and say the line's up and running. They crush it on
Yes.
balls. They've got orders, and this is a company with a multi-year runway that can easily be north of $100 a share. I think that opportunity is still there. I think it's just been delayed.
And I repeat, I have no problem buying Novix at $20. If at $20, that means they've got the first customer order, they've gone through the entire cycle, right? They delivered it, they've been paid, something to model off of, and many questions have been answered. Will have been answered if they've arrived at that point. Because if they're at that point, buying it at 20, quite frankly, with the potential they would have, even at what Raj said, 5% of the market, even with the potential they have for, I'm buying it at 20, easily over $100 stock.
I agree.
And not $100 in like 4 years either.
No, I agree.
$100 like in a year. It's that type of company. But they've got to get to that level. But EOSE, oddly, is beginning of the year, I'm thinking these guys are going to go out of business. That sucks. I mean, I hate when investors lose money. And then they pull this rabbit out of the hat. I'm thinking, holy crap, this is, and then you start looking at who Cerebus is. And it's pretty amazing. And I have to stress to investors, this is out of the ordinary. This is not a high probability outcome for where they were 6 months ago. A high probability outcome is, well, Greg and I wouldn't be talking about EOSE anymore because it'd be on the pink sheets, quite frankly. Yeah.
I agree. And by the way, the pink sheet clock was ticking when it was below $1. So this is really something to behold, and let's stay super close on it. And I'm excited to continue to talk about EOSE as the story unfolds.
Well, thanks a lot for taking time out of your Sunday today, coming on. I know you got some traveling planned, but I always appreciate it. And once again, listeners, if you've got questions, you can send them to podcasts at mrnotadvice.com. And if it's a question for Greg, please send it there. I'll forward it directly to him. So thank you for listening. Thank you, Greg, so much for coming on. And I look forward to our next podcast, and when that podcast will be about the same type of excitement about ENVX. So thanks again, sir. Why don't you go ahead and sign us off?
Well, thanks again for having me. As always, this is enjoyable for me because we're able to get into the weeds and talk about things in a fulsome way rather than being limited to tweeting a few characters and sharing a fraction of what's actually going on in my head. So thank you for making the time on your Sunday. I appreciate it.
Awesome. Have a great rest of your day.
You too.
And
Take care.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping. Just saying, I'm different. Ain't hanging on to the